more than 25% so far this year, down over 60% in the past 52 weeks. Estimates for earnings for the discount retailer are adjusted EPS of $3.38 on revenue of more than $1.3 billion. Comparable sales for the quarter are estimated to decline by 3.5%. All right, let's bring in Kevin Hinks alongside Megan Brantley, Vice President of Research at LikeFolio, to talk Five Below. Megan, let's dive right into this. How does your data line up with those expectations for Five Below, especially given the sales weakness that's expected to come?
Yeah, whenever we look at this, it's interesting because if you look at just the holiday season data, we see a bit of weakness right now. We had a shorter holiday season, we know, and this was at a time when I think Five Below was still struggling to kind of turn around its business. You mentioned the stock is down over 60% on a year-over-year basis, and we've seen the company really struggle to connect with consumers, and it's trying to turn that ship around. I will say, if you look at data just in the last month, we see a pretty big improvement for Five Below. We're starting to see some traction and some year-over-year growth in web visits. A lot of this is driven by new store openings, to be sure, but this is one of the first times that we're starting to see that positive shift in Five Below. And on this chart, I think that this is really telling because you can see the peak there, those two large peaks, that's that holiday shopping, and that's the quarter that Five Below is about to report. And you can see that the peak in 2025 came just underneath that peak in 2024. So we are expecting somewhat of a downturn in sales just for that holiday season in terms of growth, I would say. But whenever we look ahead, if you start to look at the valley that we're in right now, we're starting to see some overperformance from Five Below. So I think that the current quarter that they're about to report may be a bit tough. However, there could be some light at the end of the tunnel for this company as it finally starts to resonate with consumers again.
Megan, I look at this company I've got the 12 months down 64% here, but it's not hurting their growth. Their growth as of November 2nd, 2024, 1,749 stores, up 82 for the quarter, up 268 in the trailing 12 months. So this company, which boasts big growth out of new stores, they grow and grow and grow. And, the price of the stock, they don't seem to be worried about it. They are growing, and they boast a lot of positives in their messages, like their assortment of products, their high energy in their stores, their ability to respond to trends quickly. All these things that they claim, and all they need is the U.S. consumer to be stable. And all of a sudden, this company seems real inexpensive and, frankly, still growing like a weed. Their goal, 3,500 stores. Megan?
Yeah, I think that this is a name, whenever you look at the overall store footprint to other, discount retailers, certainly has a long way to grow. And really, this new store expansion is what's driving sales. Revenue last quarter grew by 15% year over year, but comp sales were up by less than 1%. So this just shows the new stores really are driving growth here. But I do think that the company has realized just some internal shifts. Whenever you think about something like inventory, its management on its last call talked that they're planning to reduce SKUs by 20%, hopefully, up in the next year. And I think a lot of that is they're realizing that they need to be careful and thoughtful about the products that they're bringing to consumers. Whenever the company leaned in from Five Below to Five Beyond, that upset and alienated some of its core customer base because they were used to finding that value. And so now it's about finding that right mix, because we know that those higher priced items, especially like the ones that they have in tech that range more toward that $10 mark, that's driving sales. That's nice for them. However, that also alienates some consumers who come in and say, wait a second, I used to be able to find items for a lot cheaper here, and now they're a lot more expensive. And so that kind of dinged that customer sentiment. But it is good. As you mentioned, we do see these new store openings continuing to drive growth, and we also see now the assortment of products being more on trend, as you mentioned, and resonating more with consumers, driving those visits and that consumer interest higher. And so I think that this is a company that's in the middle of a turnaround. I'm not sure if it happens this quarter, but it certainly looks to be on the horizon.
Let me ask you, Megan. How does it compare in terms of your read-through on your data to other discount retailers, especially because, we've heard a lot recently from various retailers about the worries about the consumer, and you've seen some retailers say they're making a trade down. At the same time, you have, and it sounds like this is happening at Five Below too, some consumers pushing back on when the discount retailers even raise by a little bit, like even at the dollar store, if they go up to $1.25, $1.50. What does it look like? What does your data tell you about how it compares to other discount retailers?
Whenever we look at Five Below compared to, say, a Dollar General or, say, a Dollar Tree, we actually have some overperformance when it comes to these web visits. Now, I will say this is from a very low bar. If you look at the overall web volume, we still have Dollar General and Dollar Tree on top here, but it's nice to see some positive traction. For a while, Five Below was on the bottom of that list. And I will say whenever you compare Five Below versus a Dollar General and a Dollar Tree, it's probably more in line with the Dollar Tree because it really leans into and caters to those novelty items versus the essential items like a Dollar General. So someone trading down grocery shopping might go to a Dollar General. They're not necessarily going to go to a Five Below. But we do see some signs of traction alongside, holidays in the current quarter. So if you think about Valentine's Day, you think about Easter shopping and things like that, that's where we see a lot of consumers when we look at social sentiment really leaning into Five Below to find that value. So I do think that this is interesting that our data, at least from a guidance perspective, is starting to turn positive. But from last quarter, we just don't have a strong enough conviction in holiday sales to go issue a full bullish call on this earnings play.
Bringing your data today from LikeFolio on Five Below. We've got earnings later today. Our thanks to Megan Brantley, Vice President of Research at LikeFolio. All right, Kevin, Megan just gave us a lot of information. We've got some earnings projections, earnings coming up in front of us.